The S&P 500 dropped 2% on Wednesday. Nasdaq down 1.98%. Semiconductors got crushed again. Oil spiked. Iran closed the Strait of Hormuz. Yeah, ugly day. But three stocks went the other direction. Chevron, up 1.63%. Exxon, up 1.15%. Walmart, up 1.44%. On a day the market was on fire, these three were fireproof. Let me break down why and whether this rotation has legs. Look, if you're new here, hit subscribe. Free watch list, link in the pinned comment. Chevron first. The idea is dead simple. Iran closes the world's most important oil choke point. 21 million barrels a day through the Strait of Hormuz. When that flow gets threatened, crude spikes. When crude spikes, Chevron prints money. At 190 a share, CVX trades at about 14 times forward earnings. Not cheap by oil stock standards. But on a day like this, valuation takes a backseat to supply. The stock's been in a quiet uptrend since late March, grinding higher while tech was melting up. Now that tech is melting down, CVX is catching a bid as both an oil play and a safety trade. Exxon, similar story, different angle. Exxon added 1.15%. What I like about Exxon over Chevron right now is its Permian exposure. If Middle East supply stays disrupted, domestic production is worth a premium. Exxon is the largest producer in the Permian. That is a real moat when Hormuz is closed. But here is the risk, and it is a big one. Oil stocks trade on the crisis, not the recovery. The moment a ceasefire hits, and Trump was talking about a ceasefire 48 hours ago, the oil premium evaporates. You are not buying Chevron at 190 for its dividend yield. You are buying it for the supply disruption when that ends. So does the bid. Walmart is the third, and honestly, it is the most interesting to me. WMT up 1.44% while tech got hammered. That is not oil, not geopolitics. That is pure rotation, money flowing out of growth and into staples. Walmart is the original shelter from the storm stock. When the market's selling everything, people still buy groceries. They still go to Walmart. What I like here, honestly, it pulled back from 125 in late May to 117 on Tuesday. That 7% dip gave it a better entry. Wednesday, S-bounce suggests someone was waiting for that pullback. But here is the thing, all three of these trades, they're not companies. They're expressions of a moment. Wednesday was risk-off Iran escalating, tech bleeding, so money ran to oil, to staples, to anything that felt safe. If Thursday brings a ceasefire, that trade unwinds fast. More escalation. These three add to their gains. Don't fall in love with the trade. Fall in love with the timing. One question for you, which of these three would you hold over the weekend? Drop it in the comments. If you made it this far, you know the drill. Subscribe, hit the bell. Free watch list in the pinned comment. See you next time.